Hello, everyone. Happy Thursday, unemployment, GDP Thursday. How's everyone doing? By the way, I'll be on Ninja Trader this morning also. I think it's 11 a.m. Eastern. So if you want to tune into the Ninja events, you'll see me there also. But until then, let me adjust my chair. I got all out of whack this morning with the shocking GDP numbers. Good morning, John. Remember, they can still be revised. Hey, good morning, Sterling. Good morning, Patrick. Oh, come on. AI so last month. Oh, is the AI bubble finally bursting? What else do we have? What else do we have? We have, oh yeah, American Airlines closing in on pandemic low stock price. Okay? All right. Not good. And, did you see their guidance moving forward? They absolutely, I think they cut their guidance like in half. Half. We had jobless claims come out. We had the GDP numbers come out. Silver's getting trashed. Metals are actually absolutely getting trashed. Morning, Jake. And Jake says metals getting trashed. There you go. Yen carry trade is it. I'm not seeing anything yet. It's just they're getting to a shift where we'll take a look at the interest rates. It's really going to be off the interest rates. I mean, the short term, the yen has shifted and could be setting up a drastic reversal, but that's more of a risk off trade going on with the yen so far. So we really have to see. Good morning, Royal Palms. Hey, Charles. Let's take a look at some of the numbers. First of all, durable goods. Forecast consensus 0.3 coming in at minus 6.6. Durable goods getting trashed. X defense minus 7. Initial claims just slightly better in consensus. Continuing claims slightly better. So this is interesting because now Fed's gonna have to cut. Fed's gonna have to cut, and people, headlines starting earlier this morning and yesterday. They could be cutting 50 basis points in September. They can cut in September, but I doubt it would be 50. They do July and September then. They're not. I mean, that would really shock the market and act like things are falling off a cliff. They could be falling off a cliff, but we could be getting stuck in stagflation. It's going to be very, very interesting. GDP numbers. Where is the GDP number? Coming in at, remember, this is the advanced number. Still, these are not finalized. Where I lost my, oh, there it is. 2.8 versus consensus of 2 and prior 1.4. So, I mean, if the Fed's going to believe this number, we're still operating in Q2, reverse looking at 2.8. The PCE numbers, the core PCE, coming in hotter than expected from consensus, but a big drop from prior. Okay, so not as big a drop as the consensus was looking at, but bigger drop than what the prior print was. But still, I'm not saying inflation is not coming down. I'm worried it's going to get stuck at an elevated level. And if you get stuck at an elevated level, and I'm not talking 8%, we get stuck at close to 3%, and you have the economy go into a pretty steep recession, that's not going to be good for people because prices, recessions are deflationary by nature. And if you have still prices continuing to rise, and people losing their jobs and they're already getting stressed. And then people see yesterday that you can now take a $1,000 emergency draw from your 401k penalty free. You still have to pay income tax on it, but there's no penalties. So, and you could just come up with your own reason. You know what? Like, my car needs repair, or I ran out of money to buy food this month. It doesn't have to be anything special. You don't have to you don't have to prove it. So you can draw $1,000 out of your 401k. If you think people are doing well on the majority and not the ultra wealthy that have benefited from all this QE and all the bailouts and everything else, the majority of people just aren't doing so hot, you know? And those are, if we hit stagflation, they really get crushed. Now, what else we have coming out today? Kansas City Composite and Manufacturing. We got some bill auctions. And then remember, tomorrow is the June PCE numbers and consumer sentiment, the final numbers for July. So I'm really waiting for the fireworks potentially tomorrow morning. Groups, Lilly getting hit, sort of healthcare pulling back a bit. Little bounce in Amazon, but the Magnificent Seven are taking it in the shorts right now. Oil continues to drop. Really, and copper is getting slammed. Your groups, consumer rotation in the consumer defensive today, out of basic materials and healthcare. We're seeing that with the metals and energy. So the markets are starting to price in on some of the commodity side a pretty substantial slowdown. Still 80. Let me just refresh this again. To get the top of the hour numbers in. Sorry about that. We're at 87 for the a single cut. 12% for a double cut in September, and still fully priced in for a pause next Wednesday. Remember, Fed interest rate pause meeting next Wednesday, but the press conference is going to be the interesting thing, whether they signal that, yes, we're not political, but we're going to cut rates in September, right before the election. Because remember, their November meeting date is right after people vote. So theoretically, they could cut November, December, but in their mindset is that waiting too long? Because that's after people voted. You still want to have the election results in, because you know what, it takes forever to count all these ballots, when you lose power in the middle of the night. And, there could be computer glitches and everything else, and just saying. So people might have voted, but you might not know the results. Because one of the headlines this morning was Trump supporters switching to Kamala. Okay, anybody who believes that headline, if you're a Trump supporter, you're not like, oh, I didn't like Biden, but Kamala? Hey, screw that MAGA stuff. I'm all in for Kamala. What? These headlines are getting so stupid. So stupid. Oh, and now they're trying to rewrite it. Remember when she was labeled the border czar? And now, no, she wasn't. Yes, she was. Don't try to rewrite history. It's getting so blatant. Let's just rewrite history. Let's just rewrite what we all said a couple years ago. Oh, we made a mistake. All right, who else is here? Good morning, Anissa. Good. Hey, Charles. It's a rich man's game. It's not really a rich man's game. You just have to position size correctly, and that's why I recommend people who are trading futures trade if micros are available. Only trade micros. Good morning, Heinrich. Good morning, Richard. All right, so fear and greed back to fear mode. Schiller PE only back to 35. We already talked about American Airlines. We had RTX, Raytheon, but there was nothing much. The earnings were really weird. Chipotle yesterday, expensive burritos. People still buying expensive burritos. Chipotle, after getting sold down massively in earnings, pretty decent bounce. Preparing for the next roll over. We got Bristol Myers Squibb tomorrow, 3M. But next week, with the Fed meeting and massive earnings coming out. They are one of the more serious threats, and how easily stuff can get broken. Look, you had the CrowdStrike issue All right, they put out a bad patch, but look at what it took down. One, now that wasn't even supposedly malicious, but if you could do that without things being malicious, uh-oh, uh-oh. I agree with you, Richard. So we have the S&P. Yeah, we're starting to look for that bigger correction now, Rich. I agree. And it looks like things are. This is the thing. If the markets really start falling out of bed, we could get some gold liquidation because people sell the well-performing assets to cover losses and other things, which is fine with me. But in the short term, especially with all the metals, there is nothing looking good in the short term yet. So would not be wanting to rush in with this. All right, we still have not triggered the wedge. We had the first target hit on the head and shoulders. So that's right here, closing right around the 50 EMA. Now we're in bearish mode on the daily, and we have pretty substantial overhead resistance. Okay, so if we hold these lows at least into tomorrow morning, I'm looking for on any bounce play. Come on any bounce play about 5,015 is very key. There's going to be potential little minor reaction around 5,000, but 5,015 to 5,030 is your major resistance zone at this point. We have daily cycles chopping on the bottom, but weeklies are still headed down. And weekly cycles, we could easily, even with bounces, easily be in a down cycle for a couple, 2 to 3 more weeks. And we could easily come back to the 50% from the up move from the middle of April to the highs last week. And right in front of that is the final target for the head and shoulders, and that's still holding a weekly rotation zone, and that's just a prior breakout level. Still I haven't heard from the people. I got to reach out to them because the no-brainer trade for July was the guaranteed 5% because we've been up the last 10 Julys on an average of 5%. Well, how's that working right now? Even if we bounce. So why? You got to put everything in context. I rolled a ton of stuff into treasuries. I told you that a couple weeks ago. Because I'm not looking to eke out the last little bit. And now we open July. Where do we open July? Around 55.34. So even on a bounce, could we end up July flat? Yeah. Easily, we could still end up July flat if we get a bounce. That takes it right back into congestion for a potential rollover move. Could you even end, if PCE comes in incredibly weak, could we get a more substantial bounce? But there, this whole guaranteed trade, there's nothing's guaranteed in the market. When you start talking about guaranteed, you're not managing risk. No one reports the news anymore. They will write pieces designed to influence outcomes they want. Exactly true. There is very little actual news reporting. Everything's like it. I think our news medias are secretly influencers. Oh, we got to influence. You're right, Jake. They're all influencers. And what's the big goal with everybody wanting to be an influencer? So you're actually not a productive member of society because you're just trying to influence people to buy products or do things? That's how you're making your money? Okay. Really? Next target's down, by the way. Keep them. We have some support on a rollover place about 54.35. And then the next level's down 54.11, 53.64. Yeah, that's what you want to look at, Eric. You you know, because you can really manage your risk. And the full contract sizes are like, would I ever trade a crude full contract? No. Even if you could, there's no point to, because you can't position size and manage risk as well. You're better to trade the minis or the micros. It gives you so much more flexibility with managing position size and getting out of positions partially. Okay, that's the thing. NASDAQ, right back. NASDAQ, not surprised to see a bounce here. Because look, from the run ups from the April lows to the mid July highs, we just hit a 50% retracement. And the first target on the modified head and shoulders just hit it. So, would I be surprised to see a bounce here? Not at all. But we've bearish mode on the daily. We have the hooking over 50. Key area is 19,550 on any bounce play. Same thing. We could easily still be headed down, even with bounces, for a couple more weeks. We're also getting close to the bottom of that rotation zone. So we could still see another bounce, but based off of being bearish now on the daily, means, look, I was favoring short setups, and I'm being cautious on long setups. Long setups meaning, when I mean cautious, you can get a long setup, but I'm using conservative targets and I'm making sure my reward to risk is really in line. Okay? And if I can't get proper reward to risk, a substantially good reward to risk, it's no trade. Means it's cautious mode. Now, if we hold these lows, the thing that takes it, first of all, back to neutral is you need the NASDAQ to get back above 20K. That takes it to neutral. And to get it in the short-term bullish, if these lows hold, we have to get a close back above 2263. So on any bounce plays, and any bounce plays take you straight into prior support becoming resistance. So my targets have to be in line with that. But anything that takes me back to more sustained bullish mode has to get, we have to get a close below above 20,263. So keep that in mind. The Dow, pretty weak here. Trying to form possibly a little mini double for a bounce play only, but pay very close attention to that 4-hour rotation zone. The Dow with the close yesterday also in neutral mode, sitting against very key support. Very key support. Let me bretch this down here. Very key support right here. So if this level can't hold, I watch for a quick trip to the 50, about 39,750. If this can hold, 40,500 is a resistance. The Russell still holding the lows back from the 22nd. This did not hit double top territory, and still holding the rotation zone. Also, watch this. Haven't talked about this in a while, but here's your ratio. The Q's to the IWN. So the NASDAQ to the Russell. Look at this. Look how overextended this got. I was watching this. We had potential doubles that never triggered. And then it ran. This actually set up a massive Elliott wave reversal pattern, which actually triggered a couple weeks ago. And look at the correction. Would not be surprised to see a bounce, but a longer term. I'll still be watching for a longer term pair trade for the Russell to outperform the NASDAQ longer term. over the next few weeks to months. That does not mean they can't both drop, but the NASDAQ's at risk of dropping more than the Russell. Let's take a look at some others. The VIX, still, we've had a pretty decent pullback, but I mean, this is in line with the spike highs from April 15th. All right, we're not at super elevated VIX yet. We're relatively elevated compared to recently. So, again, to start sustaining more of a bullish move, got to get back below us about 1750 and then really start moving below 1640. The DAX still holding the 50% and the trend line right here, dip below it, but still going to be watching where this closes. The thing that gets me bearish on the DAX is a close below 18,137. The resistance now is 18,500. Notes, we little tried to rally today, but then you had the GDP numbers coming in higher than expected. You know, I'm not buying these GDP numbers either, but that's what they're printing. The 10-year, we hit the first target on the double. The first target was hit. That's why you just got to follow the probabilities and the rules. So at least the stop is raised. The stop is raised. You can see spike down here to 62.5, but no close below it. No close below it. And then the bounce. So this is going to get real interesting going into tomorrow. 10-2s. Yesterday, still climbing. And holding. Still going to watch for that to flip positive. The double, potential double, the confirmed double but not triggered double. It's going to get interesting to see how this goes tomorrow with the PCE numbers and consumer sentiment. So the dollar holding in there, but no triggered double trade yet. Crude, we were a little bounced. Now, do we have? The only thing we do, the only thing that I'd be watching for any short term bullish would be if this double triggers. It's still technically valid. Unless we trade below 75.95. We trade below 75.95, the potential doubles off the table. That would need, and I'm just watching for bounce and then rollover plays also on the crude in the short term because it is in bearish mode, and we did close below 62.5 by 4 cents the other day. But the only thing that would take I'd watch for the bigger bounce then is if we triggered this little mini double. Natty gas. There's still not a great pattern in here, and I'm expecting potentially lower prices unless we form a little mini double that triggers. I'm still why? Because we closed below 62.5, and we can easily return to this big base. This big base. Gold. What is key? We did have a little mini potential double that never confirmed or triggered, and that was taken off the table now. But what will shift me into rewatching for this return to this solid base is the close below 2361.4. So that's what I'm paying attention to today. Silver, we have the weekly double, which is now confirmed unless silver puts in a massive bounce here today. Looks like the double's going to trigger 2686, 2605, 2514, which could take a look at the second target here, right back to the breakout zone. So if this triggers, would I be doing anything from the bullish side in silver right now? No. Copper, Coming back to the 200. Closing yesterday below 62.5. We're solidly in bearish mode, so any bounces in copper, we'll be watching for rollover plays. We could easily in copper. Remember this huge let's get to the weekly. Look at this huge multi-week base. Look where the 87.5 is. Look where the 75 is. Would I be surprised to see a little bounce here? Not at all. But look, going to be watching for it to return to the area of this multi-week base. We said what I was looking at yesterday, returning to the 200 area and the lows from beginning of May, which we did. So now this is looking like it tested some very key area. Am I bullish on this for yen weakening? I'm going to watch for a continued bounce in here, but then it's got a lot of heavy lifting to do. So the key resistance down there is about 155.80. Good old Bitcoin finished the little mini double. And nothing else to talk about there. If it does break below the rotation zone, pretty substantial support coming in at 62,775 area. Spiders in the Qs. Your very key resistance on the spiders is going to be right around yesterday's open. Not just because yesterday's open, it's a key close from the Friday the 19th. It's a key prior closing area from July 2nd. And from the gap open around June 20th. That is a very significant level. And you have it in bearish mode on the daily too for the spiders. It's within the 50 to 62.5, so we could be getting a bounce in this area. There's no major bottoming pattern yet. But a bounce play, anything with rallies, even up to 549. We watch for, again, rollovers. We could be down substantially still in 2 or 3 more weeks. Key area to watch for in the Qs is right around 475 to 475.50 on any bounce. If it heads lower, 458.30 is the 50% retracement. Remember, we hit it on the futures, but not on the Qs yet. Tesla, it's in bearish mode because it double triggered. Hitting the first target, so it's stop reduction. Rotation zone could cross, so it's could be on bearish mode with the rotation zone, so any bounces back to rollover plays. Nvidia, closing below the fit. Remember, it triggered the double. Got a little mini bounce, closing back below the 50. The targets, we should still see a continuing unwind of the potential AI mania. Next major, this is where I take a target area because the 50% from the run-ups in April's lows to the highs that were put in on June 20th, the next target area would be 106.68 to 108.16. But this can still continue to put downward pressure on the markets. XLRE. Yeah, you do have a little mini double top that's triggered. That hit the required levels. It's against the rotation zone. But you could easily see a little mini rollover, and then for a continued decline, you really have to get below that 200 because it's coming back into some major support. But yeah, definitely. All right. What else? You see, I found that switching from micros to minis is about 5 micros because commissions start adding up for my strategy. Very smart, though. Again, taking into consider commissions and coming up with where you have to be on the micro to mini ratio. Let's take a look at the open. I'm going to check the tick today for the open. The tick, not a super strong tick opening. I mean, above 600 is not bad, but really going to watch to see as this pulls back into, you can see the massive tick, multiple spikes below 1,000 yesterday. But I'm going to be watching to see how the market reacts as the tick pulls back to 0. Because you have a pretty strong support base that was built since the European Open here. If that breaks, then uh-oh. But we have a very strong little support base. So I want to see if that holds with the tick coming back to 0. See, Coco, once you guarantee something, nothing is guaranteed in trading. After 10% correction, you're guaranteeing it. Well, what if you're not right? Nothing's guaranteed. Put a probability with it. Guaranteed would be 100% probability. 100% probability. You're saying that there's a 100% probability that the NASDAQ will hit 24. 100%. That, which is, again, a ludicrous statement because nothing in the markets is 100%. I heard it was guaranteed that that was a no-brainer trade for July in the markets. Guaranteed, people told me. They told me I was an idiot for going into short-term bills. An idiot. Because it was guaranteed. We have last 10 out of 10 years. It's not guaranteed. There's a probabilities. And if you can't assign a probability to it, it's useless for me. There are no guarantees. Even doubles aren't guaranteed. Wedges aren't guaranteed. Head and shoulders aren't guaranteed. Something could happen in the world that we could get a massive wipeout. Something could happen. So nothing's guaranteed. Oh, it's the last 10 out of 10 and the average is up 5%. It's a no-brainer July trade. Guaranteed. 10 out of 10 years. Well, what about, why are you stopping at a 10 out of 10 years? Why? Because what happens if you go back 11 years? Well, it's not fully guaranteed then, is it? And just because something happened 10 out of 10 times does not mean it's guaranteed. You're cherry picking data. The market, on what time frame, Coco? The markets don't always go up on a short to medium term time frame. On a longer term, yes, you have an upwards bias. But start talking to people who are trading the Nikkei in 89. How long did it take that market to recover? Let's see. Like 99, it only started fully recovered just a little bit ago. So 25 years, that's long term. There's an upwards bias in the stocks over time, but not in the short to medium term. You can be in bearish mode for a very long time. I hate these asinine statements. You know, yes, long term. All right, here's our little chart back to the .com bust. How long was it till it took out the highs from March of 2000? Let's see. October of 16. So let's just take 2000 to 60. That's 16 years. Yes, it goes up. But again, you're telling you it's the same thing. Markets always go up. Markets always go up. Yes, they do. But I still have people. I still know people that are still holding Cisco, because their average price is above 70. It's been 24 years. They're not back to where they bought it. They're still holding. Markets, yes. Put it in context, please. Else you're not helping anybody. It's like real estate prices always go up. Yeah, but you have to sit through a hell of a lot. What happened? Yeah, the Fed, but the Fed isn't going to be able to do that forever. And they have changed in that time frame, but you think the Fed can do QE infinity forever? We're gonna supersede every business cycle. Look, you can get away with printing money until you can't. You can get away, look at Japan. You can get away with a lot of stuff until you can't. Okay? And to think, oh, well, what the Fed balance sheet could go to 100 trillion and it wouldn't matter. Oh, yeah, it would. Oh, yeah, it would. At some point, things matter. I'm not saying the market is gonna, has to go to zero, but manage things correctly. And if people are just sticking your head in the sand and saying, "Oh, this market can't come back down," I talk to agents, real estate agents, for all prices will never come down. Oh, wages are suddenly going to skyrocket for the average person to make things affordable. Oh, it's just going to take interest rates going down. Well, yes, if the Fed takes interest rates back to zero and mortgage rates go to 3%, you will have sustained higher prices because people are stupid and just buy off the payment, not realizing what they're paying. Okay? But we need some magical shift. And if I'm going to tell you something, if the Fed takes interest rates back to zero, you're going to watch inflation skyrocket again. Already container shipping rates are going up drastically. The only thing that's beneficial is crude is dropping, and some of the metals are starting to drop, which is going to take pressure off the PPI. But we could still stay at an elevated. Now, if we go into if the economy really falls off a cliff, hopefully we'll get some disinflation. Hopefully. But it could then you're looking at a pretty severe recession. We need some price resets. The dollar doesn't need to collapse for this to turn bearish. Dollar's not losing its dominance in the short term either. Long term, yeah. Long term, something's got to change with the dollar. Short term, the dollar can pull back. I mean, let's look at the weekly chart of the dollar. Dollar was lower back in last July. A year ago, dollar was a lot lower. Let's take a look at the longer term part. The dollar's collapsed. Well, let's take a look at the monthly chart for a dollar. We're still historically strong. All right? Where's your dollar collapse to? I don't know. Even come back to 99 to 100. It's back to a prior very key support level. Is that a collapse? Yeah, will the dollar trade back there? Oh, easily. Actually, if Trump they want a weaker dollar. But you can't just ignore what's going on with the global economy. A lot of people like slightly lower rates. A lot of people would like rates back in the fives, but that's not magically going to trigger a next boom in housing. All right, I gotta run. I'll be on Ninja Trader this morning if you want to tune into that. Otherwise, I will see everyone for PCE Friday. Talk to everyone later. Bye for now.